Hello everyone, welcome to the Ichimoku daily analysis for the S&P 500 for Tuesday, July the 12th, 2011. Well, a continuation of the trend to the downside today, and we have a candle that's made a lower high and a lower low. A red-bodied candle which tells us that the sellers made net bearish progress on the day between the open and the close. If we compare it to the previous day though, the size of the body is very much smaller. So the amount of net bearish progress made by the sellers was considerably smaller than the previous day. That does raise some concern about continuation of the trend to the downside. Having said that, however, the bears were strong enough to close this market down towards the low and very close to the low. That means that the bears have closed this market in control for the day, and that's quite important. They've also shown very strong commitment by closing the market down towards the low. We can also see this largish shadow on the top of the candle where the buyers lost commitment as they were trading up towards the highs. So quite an important day for the bears. Even though it wasn't as bearish a day the previous day, it still was quite a very solid bearish day. Now, having said that, however, we can see this green line, the area of support at 1313 that the market failed to take out. We can see here previously that the market had tested that region and we saw some buying coming in, especially here where that area was tested on 3 occasions and the buyers came in. However, that area didn't hold. So the market has interacted with there, and even though that area has been broken, it can still hold as an important area of support or resistance and support in this case. So the next trading day will be very important with regard to this 1313 region. If that's taken out, then the market will perhaps test down to the 1300 round number, and we should potentially see very strong support coming in at that area. Now, the market is trading down below the cloud. We had the bearish breakout down below the Ichimoku cloud for yesterday's trading. Today, the market has remained down below the cloud, so a fairly bearish day in terms of the market continuing to trade down below the cloud. The market is trading up above the Kijun-sen, the pink line here, and that means that the market remains bullish in the medium-term time frame, but only just. The market is retracing back towards that line. That line, the Kijun-sen, has turned flat, and price action is being attracted back towards there, and that's one of the things that happens with the Kijun-sen. Whenever it turns flat, it tends to attract price action. The market is now trading down below the Tenkan-sen, the green line here, and that tells us that the market is bearish in the fast-term time frame. If we look at the shadow on the top, the market rallied towards the Tenkan-sen and found resistance at that level. The buyers lost support at that level. That also coincided with the area where the cloud was, and we know that the cloud will act as an area of support or resistance. In the case of the cloud here, a very small amount of resistance, because it was very thin there, and it was actually where we had a crossover previously. So a very thin amount of cloud, but it has held as an important area. Now, we should also look to the Kijun-sen here to act as potential support, which is trading at 1307 if the trend does continue down. So after 1313, we have 1307, but then certainly the 1300 round number. Down below 1300, we don't have any major support until the market trades to around 1275. So if we do see quite a bearish next few days, there is potential for the market to trade substantially lower. To the upside, if we do see the market rally, we do have strong resistance overhead, and we have the cloud, and the cloud now is quite a lot thicker than it was for yesterday's trading. So a larger amount of resistance for this market, although not a great amount when we compare it to an area of the cloud, for example, over here that the market will perhaps interact with in the future. But we do have some very solid levels of resistance at 1324, 1332, then a minor one at 1340 and up to 1344. So quite a bearish day, a continuation of the downside momentum. Important areas for the market to interact with to the downside, important areas of support. It seems likely that the market will continue and test lower levels, with the bears closing this market with a control. Barriers to the upside with fairly strong resistance overhead.